Good morning, boys and girls. Welcome to the Flow Show, 5th of June. We've got BOC day today, amongst other bits and bobs. Get some jobs data from ADP as well. So lots going on, lots to go over. Before we start, I just want to bring your attention to the summer sale we've got on, which is ending today. We'll be ending, I believe, just after the face show. So this is your last chance to pick up a bargain and get into our platform if you're not there already. You get to join myself and the K-Meister and all the other team and all our roomies who make this community one of the best in the business. So last chance to take advantage of that sale. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. And as Ryan says, this is your chance to join one of the best communities out there. Really, I've been trading markets for 40 years. I've been market making in banks, and in the FA community, it's just a band of brothers and sisters, and everybody is trying to help each other, and it's a really nice place to be, especially that we know that when you're sitting at home in front of your PC, it can be a bit of a lonesome affair most of the days. So this is a great community to be in, and when you could take advantage of such offers, it's a really great thing to do, especially that when you take a semi-annual and an annual subscription, you can enter a free draw to get access to 100K TFP account tryout. So that's a nice little cherry on the pie. So no more time to waste. Back over to you, Ryan.
Yep, spoken like a true salesman there, mate. Yep, that's a very important point. You get 100K TFP account, and it should also be known that when you get a rate with ForexAnalytix on a semi-annual or annual subscription, you will keep that rate as long as you subscribe. But you can also take part in any other sales. We don't raise prices mid-contract or bump you up at the end of a sale offer. You get to keep that price forever. That's the way we like to do things here at ForexAnalytix. But I digress. If you want to take advantage of that, of our chat room another way, check out our NFP competition. We have got an absolute bumper bag of prizes this month, not just the free 30-day access to ForexAnalytix. We are giving you a free 30-minute coaching appointment of your choice. There's 5 coaches available for that. So you can get myself, K-Man, Blake, Leandro, Gregor. If you want to pick one of those, if you win, you get a free 30-minute coaching session. So that's our first prize there for whoever gets closest. Not only that, there's prizes from Live Squawk for all the winners and from Peak Suite. If you don't know those guys, they've got a big platform over there. News aggregation, let's call it news and analysis aggregation. They've got a customizable platform there. You can put in TV channels and feeds from Twitter and Reuters and the like. So just to run over that for the NFP competition, first place will get 1 month's access to Live Squawk, free 30-minute coaching session as mentioned, an annual subscription to Peak Suite, and obviously 30 days access to ForexAnalytix. Second place will get that annual subscription to Peak Suite, 1 month's access to us here, 2 weeks access to Live Squawk. Third place will get 30 days ForexAnalytix, 1 week access to Live Squawk, and again another annual subscription to Peak Suite. So plenty of reasons why you should enter our competition, and I shall put the link to the blog in there so you can read all the rules. The rules will be important this month. You can enter your guess if you just scroll down even. Here, if you click the link for the tweet of this post, that's where you need to put your guesses. So click that linkity dink. That'll take you to the tweet, and then you can put your guesses on there. Only guesses on that post will count, nowhere else. So anyway, there we go. So big prizes this month. Don't miss out. And I'll put the link to the blog post in there, and you can have your guess. Right, let's get down to business then, because we do have lots to go over. Where are we going to start? We're going to start in Japan because we had those labour wage earning numbers coming out, and all looking pretty good. Average cash earnings year on year up 2.1%. We're expected to rise 1.7% from a prior 1%. Overall wage income of employees 2.1% as well. But if you look at some of the real cash earnings, as you can see there, over time year on year was a negative, a little bit more negative. Real cash earnings were down 0.7%, were estimated to come in down 0.9%. They were previously down 2.1%. So that gap is closing between wages and real earnings. Regular pay was up 2.3%, the highest since 1994. So we are seeing those wage increases filtering through to the broad labour market. Maybe not as much as might have been expected in most cases, but there may be a bit of filter through both April and May. So we'll keep an eye on those next month just to see what happens there. But positive news for both the BOJ and Kishida there, Kay.
Well, yes, on the headlines for sure. It's always positive that we finally get some of those long-awaited cash earnings and wage hikes. That is for sure positive. I still say that the issue, not that it's going to matter a great deal in the immediate for the man in the street, but if you look at those real cash earnings, that's still going to be, I think, for the global spending and still going to be a little bit of a break for the BOJ. If that number would have come back into positive, then I think we would have seen a much more positive reaction of the market as well. And as a matter of fact, when all those data came out right afterwards, actually JGB yields dipped a little bit, back down to even below 1%. And now it's ticking up again, the 10-year. But as you can see, just early doors, early day for us there. It dipped just that slightly, that tiny bit there, right? I think, yeah, it's in the wee hours, and that must have been when those real cash earnings hit the market. But yeah, overall, I think it's still something that we may have expected. I don't know if the market would have expected something of 3% or so, but you know how a market always hopes for more than the prettiest girl can give, you know, and so yeah, I think a little bit of a lukewarm reaction there, but overall quite okay news, I'd say.
Yeah, no, I agree with that. And yeah, I don't know if perhaps it is we're going to see this filtering over both April and May because obviously not everyone puts in their pay rises at the same time and fiscal year and whatever. But yeah, we'll keep an eye on those numbers in May. They could be higher. Might be a bit of trouble if they come in significantly lower.
Yeah. I'm not overly sure anymore, and I don't recall, but May could be bonus month as well over there.
Yeah.
So we need to keep an eye on that as well, because there could be a bit of a bumper bonus payment coming up too. But I need to check. I don't recall exactly when bonus month is.
Yeah. Okay, mate. I'll leave that one with you then. Okay, coming over to some of the PMI data dropping as well. We had where was it? The old China Caixin Services PMI coming in 54, so a nice jump there over 52.5 expected and prior 52.5. So that was pretty good. We also had the Aussie services coming in a little bit softer, missing expectations down on last month as well. Japan, a little bit of an improvement over expectations, but still a bit down on last month. Then we come through into Europe, had some industrial production data from France, which was pretty good. Also, Spain still going gangbusters there, 56.9. They're really showing a bit of an improvement. The green shoots really taking hold over there. Over in Italy, a little bit softer, only a pick down on last month. France, final numbers as well, just a little bit confirming the drop. Germany, that was a pretty good beat, actually, for the final number. You don't usually get quite a high differential, shall we say, 54.2, so up a whole point over last month. So again, green shoots taking hold there, though not in manufacturing. And in the pound eurozone number missed by a little pip over the flash number. Then into the UK, and the final number came in unchanged over the flash, confirming the drop there. Right, swinging back to some central bankers, and in Australia, RBA's Bullock says they're looking for a soft landing for the economy. Underlying inflation is coming down, but only slowly. If inflation proves sticky, they won't hesitate to hike. But if the economy is much weaker, they'll be ready to ease. And easing will come when they are convinced that inflation is returning to target. They said in the next 12 months, it's possible that there's 50 basis points of lagged tightening yet to come through the pipeline. So a bit all over the shop. I mean, she's a bit on the hawkish side, Kay, but these comments are playing both sides of the fence a bit.
Yeah, I thought reading at the headlines she was much more hawkish than that, but
she
really
was speaking to
over,
Parliament, so
sorry?
she was speaking to Parliament, so she's probably expected to be a bit on the fence.
Yeah, and, but she does seem like really wanting to avoid to ease too soon. But when I look at the Australian data, I don't know whether she may be missing a bit of a bus here, or as I said in the room, is she afraid that Aussie would tank if she starts to really talk about cuts? I don't know, but it's she seems extremely prudent not to go too much to the dovish side. She definitely looks as if she wants to be hawkish for longer. That's how it comes over to me since she took over, at least, and it's still the case. So yeah, I do think that the market is really looking at the data and a little looking aside of and perhaps with a bit of ear flaps also. I don't know how you call it on and not listening too much to Bullock, or for that matter to perhaps any central bank these days. But yeah, it really seems she doesn't want to make a mistake to cut too early, right?
Yeah, I think that's a great 100%. Yeah, well, they've kept it in. They've kept hikes in the statement. Every monetary policy meeting, the statement says we considered hikes, but the strongest decision was to keep rates on hold. So yeah, they definitely don't want to take a hike bias out like some other central banks, but they are still sitting in the middle, so they're ready to go either way. Which makes a change because their usual forecasting prowess is one of the worst in the central bank sphere. So yeah, we'll wait and see what happens. Go with the data dependency. Riksbank's Bremen says that if the outlook hold, the rate may be cut twice in Q2. A bit of confirmation of comments from those guys over there that they're looking for 2 more cuts potentially. ECB's Casimir was allowed out the blackout cage, speaking about financial stability, hence why he got this comment in, because no one's allowed to talk about monetary policy. But he says inflation is on a good trajectory and believes the ECB is nearing its first interest rate cut. We will find out tomorrow. There have been some reports that the ECB is looking for more commercial real estate loan provisions from some German banks. That means they are seeing potential stresses in finances at German banks related to commercial real estate. So they want to, long and short, they want them to pony up more reserve money for that to make sure that they're covered for any eventualities. Yesterday we got a bit data out the US. We got jolts out, which came in softer. Coming in at 8.059 million versus 8.37 million expected. The market obviously seeing things weakening in the jobs market from that aspect, and rate cut expectations ticked up a little bit, nothing hugely significant. But again, we're seeing this data going in a little bit of a trending way at the moment, a little bit weaker. So we'll see what the ADP brings later on today. Factory orders out too, and they were fairly positive, 0.7%. If you strip out some of the big ticket stuff, like transportation, that also rose 0.7%. So that was pretty good there. Nothing really of note in the durable goods revisions. Politics. Biden's making friends with China again, says won't rule out using US forces to defend Taiwan. I haven't seen any Chinese response to that yet. Might have missed something, but that's not a comment that they'll be happy with. And last night we had our first leaders debate here in the UK between current PM Sunak and Labour leader Starmer, the opposition. There was a poll right after it that had Sunak actually winning in the first head-to-head in terms of overall presentation. I won't go into the details of what went on, the usual bluster and we're going to do this, we're going to do that, we're going to do the other. But it seems like Sunak might have clawed back a little bit of credibility, it seems, with that. There's going to be a few more of these coming up. I think the next one is on Friday, if I'm not mistaken. So we'll see what happens on there. But no real change that much to the overall thinking that Labour is going to win by a landslide. Although for those not from the UK, there's been a little bit of a cat amongst the pigeons with a guy named Nigel Farage, who's taken over the Reform Party, which is getting a lot of MPs moving across from the Conservatives. So there's a lot of talk here that him becoming leader was a big risk for both the other parties, and in terms of Conservatives, that they will lose a lot of votes to Labour because of his inclusion. So that's becoming a little bit of a political triangle at the moment, but we'll keep track of that. Nothing really for the quid to trade at the moment. We're still in a position where if it's a majority victory for Labour, it's likely business as usual. If it's a mess, hung Parliament, that's when investors will take note and we'll probably see some moves in the quid. But we'll keep an eye on that one. And that's all I've got from the news and data. Anything you want to bring up specifically, Kay?
No, Ryan, not for today. We can look forward to what the Bank of Canada is going to do or not do. Well, it's still, if you want to talk about those elections that we had, South Africa is still looking for its coalition. DA said that they would be okay, but there are conditions. I think that is kind of what the market is picking up a little bit on now, and conditions means perhaps a little bit uncertainty, and the rand is getting a bit hammered. Yesterday we had a weak Q1 GDP coming out, actually going into contraction in South Africa, although that is once more a back-looking number. The market is still kind of trading those just in the global line of things in South Africa, and we see the rand weaken up. And on the rest now, after the first scare in the Mexican peso, things are quieting down a little bit. I guess we're still waiting for the final numbers and see if the Morena party needs a little some of those smaller parties just joining them to form the overall majority. Could be that we are in a bit of a well, a stalemate for now on the political side, of course, because they are not going to push those reforms through or those planned rulings through straight away. It is, I think, the biggest scare, the immediate scare, is behind us, and now we are like more going to be in a bit of a wait and see mode, and with probably the MEX trading up and down and in the middle for a while.
Yeah, yeah. I've mentioned this in the room. I think this 1740 level is going to be a bit of a decider for that. If we bounce off of there, or if we get to there and bounce off of there, that's going to suggest that the market isn't ready to, completely go goldfish mode and ignore the political strife. But then if we get below that there, then that would suggest that we've had our little flush out after the election, and it's back to business as normal.
I even wouldn't rule it out, before the real poo hits the fan later, perhaps a month or two from now, and I wouldn't rule anything out, really. It's still an 11% currency, and it's still a friend-shoring country for the US as well, and they are still firmly part of the USMCA agreement. So I mean, before they really send all the investors away, there may still be a bit of peso flowing through under the bridge,
Yeah, I was going to ask about that, because that was the thing that Trump dreamt up, wasn't it? The USMCA. So is it going to be a big negative if he comes in again? Is it going to be a big negative for
I think
the
so.
peso,
I think the thing is, well, I mean, you know what? You look at your chart, you look at what happened in when was it, like February or no, when he, that was in April there, that big spike, and then we had spikes before. That one there, was it? Yeah, there was one over there. That is how it's going to trade, I think. But if he gets it, he's probably going to hammer everybody, whether it's Mexico or China. So what does it mean for the investor? It's probably going to be an immediate negative reaction to the Mexican peso, because he's anti-immigrants, build that wall again. Don't let anyone get a free ride. So on the face of it, it's going to be a negative, but then it's going to be a negative for everybody. And then at the same time, we know also that people in his entourage are planning or trying for anything to lower the dollar. And so I don't know. It's the Trump thing. I think is going to weigh on the mix initially. But I think before that, we will already have a good idea how it will evolve, because AMLO already said that he, during or even before the official handover, he wanted to push some reforms through. So I think we are in for a second half of the year in the Mexican peso, which is going to be very hot, very, very hot.
Yeah, hopefully some good volatility. So
a lot. We could see a lot, and I think what we saw yesterday and the day before, Ryan, is an example of what we could get, perhaps throughout the whole of the second part of the year. I've read a lot of people saying that this is it. The period of the strong peso is over. I'm less categoric than that, to be honest.
Yeah, going to be an interesting one indeed. Right, let's take a little look around. Not an awful lot going on at the moment in a lot of pairs. We're doing a lot of treading water. Euro doing a bit of treading water, banging off the top of the zone for a change. Not quite willing to go down. Obviously, the ECB coming up tomorrow, so the market's not going to get too far out its pram about that one. Euro sterling still glued down here. We did have, I think it was Arnis, I don't know if he's here today, but he was asking on Face yesterday what to do about this one. I know a lot of people are long on this one, like I am. I'm looking to maybe reduce. I started buying when we came down to the 20s. So if I get a move up to 30s, I might knock those out and just reduce the position down a bit. But depending on where we are going into the ECB, I've got stops and sell stops down below the bottom of this zone. I might just pull those sell stops, reverses, and move my stops a bit lower down to stay out of any noise, because I don't see any reason why the ECB is going to cause a big upset for the euro. But if we're close enough to the level, there might just be enough volatility that we get some shenanigans and a little bit of a knock through, and I don't want to get stopped out on a quick move to find it's up 50 pips after that. So I might just pull my stops down a bit further.
I think that's the risk, Ryan, as you say. I mean, it's the quick blip, because if you look at the option volatility, the options market is not looking at anything really, apart from, yeah, you've got the day to day, the overnight event volatility. But look at the volume in euro sterling. I mean, nobody in this market is expecting any volatility from the ECB, nor even the Bank of England. So it's going to have to be a real big surprise for this to really move far away from where we are, I think.
Yeah, exactly. That's my
but
thought.
You can't ignore you can't ignore or you can't forget about the occasional blip. The algo hitting the stuff, whether it's down or up on a one word or so in a press conference.
Yeah, exactly. So as I say, I might move my stops right all the way down below that 85 level, maybe even as down as near 84, or even under, and just keep it as a bit of a disaster stop and see what it wants to do. Try and stay out of the way. But also, if you are trading this as well and you're a bit worried about what's going on, you can always, if you've been getting long down here, you're not going to give too much back if you get out the trade altogether, go flat, and then decide to get back in after everything is known about the ECB. Even if you might not get your levels that you were in at before, you can still maybe take part in that or wait for another test of the 85 level should we bounce. So there's two ways to play it if you're trading this when you come into these big risk events, and that's all you have to look at. How do you manage your risk? Don't sit there guessing, oh, the ECB is going to do this, the ECB is going to do that, and so my position is going to be all right. You've got to plan for the worst outcome and protect your account. That comes first and foremost. So if you traded this and you think flat is the best option, so be it. The markets will be there tomorrow after the ECB, and you can retry your trades again. Another one I'm in at the moment that's doing okay. I traded Aussie Kiwi on the long side when we were hitting this level down here. The old magnet at 108, and managed to get a bit off in the rallies here. But I did a bit more just on this move down here, and then it broke, and then I flipped it short 85. So I'm trying to ride this short down. We have just bounced off the 61.8 fib of the move since February. So just finding a bit of support in there, and as you can see, it's just been a bit of a level going back as well around here. So that's what I'm looking at here. I'm looking for a move under that. If we get it, I'm going to take some off into this 107.20s area, which again has been one of those on-off pivot point support resistance areas. So that's what I'm looking at for that. But this one, again, if you take the RBA into consideration, this is one where, it didn't take a hawkish stance. The Kiwis really outperforming at the moment, Kay.
Oh yeah, yeah. You know what? That's what I was saying. Like, the market is looking through what Bullock may be saying, because the data are saying something different. It's not. And again, I mean, and that's typical of what we are seeing now. This messy second quarter. I've always been saying it's not that things are completely falling out of bed in Australia. I mean. Don't get me wrong. This is not the thing where you go like, I want to sell Aussie and buy it back a year from now. Not at all. But yeah, the Kiwi is definitely outperforming, and it's outperforming the on the Aussie Kiwi. By the way, I also pulled up that chart this morning in the chat room, and I've noticed that even on the longer term moves, we are in a bit of an area as well around this 107.40 50s on the Aussie dollar. It's an interesting zone there, so it's worth monitoring what people do there. So yeah, and you know what? Based on data, and then there is still a bit of interest rate differential. Of course, that doesn't necessarily play out if you get a big move one or the other side. The interest rate differential is absorbed extremely quickly, but I do think it may be just at play while those Australian data are not stronger than what they are in the immediate.
Yeah, no, I think I agree with that, and I think also, as we said, the market that was a really quite a hawkish turn from the RBNZ.
As well.
And I think that caught the market on the hop as well. So, you take a currency like this, the cross between the two. Yes, the RBA are not taking hikes off the table, and Bullock is a more hawkish central banker, but that flip from the RBNZ is really taking over at the moment, which is good for me and talking my book. So as long as that lasts, I'll be a happy bunny. But we shall see what happens. We can't predict the future. We've had a decent old bounce in dollar yen this morning. I thought we might get a bit more reaction on that data, but as you say, maybe we got a bit of that early in the morning. But we've had another storm up. This one is still. We talk about messes in Q2. This one's still all over the shop, Kay. Yeah, I can't call it one way or another from 1 minute to the next.
No, it's unless you've hit that 157.75 there. If you talk about purely the dollar yen, and then you had the unwind of the carry trade in your favor, but it's still a currency where you take profits relatively quickly. And we've been saying that. I mean, it's something where if you are in a position, take your profits relatively quickly, because there may be something else around the corner the next day, and that's exactly what we got again. Harry hindsight always can explain everything, but I do think, and yesterday I was already saying that, like it does look like the biggest part of the carry and wind, the immediate one, is done. We saw dollar mix slowing down. We saw the euro mix slowing down. We saw euros. We still got still had another low in it. I think people were trying to get some stops out of the way, but actually the levels held pretty well, and that's the reaction that we had that in the dollar yen and in all yen pairs on the back of it. And there's one counterintuitive thing as well in with the yen, and that is the correlation between yen and equity markets, and especially if you look at the Nikkei. Nikkei had a little bit of a bounce, wasn't much, but had a little bit of a bounce as well, and typically that puts a bit of pressure on the yen. It's like one of those typical correlations you see when S&P is ramping higher or so. Sometimes it puts a bit of pressure on the dollar in the in risk pairs, and so that's I think all of that has made it. And the thing is sometimes it's just as simple. If you run out of sellers, and the thing just rebounds, because the market is going to stand up and see like 2-year yen yields at what is it, 30, maybe a bit higher now, and where are they? 2-year yen yields at 36 BPs, and then you have the 2-year dollar yields at 475 or 480, and then the market wakes up and says like, hang on a bit, if I stay long yen, it's going to start to cost me money, and sometimes just as simple as that.
Yeah, and I think you're spot on with that. I mean, this is the price action is clear as the nose on your face. We do get these big moves down, and it's butcher's gloves territory. Where do you try and catch the knife? But look how quickly we bounce back from it. We see buying of these pairs far more longer lasting than we see in the dips. The dips are always quite sharp, quite fast, and they're not lasting. So which way the market is leaning into this one. But trying to pick where a low comes in to try and catch a knife on these moves is another question altogether. You think 155 would hold. No, it didn't. And then you're down another 150, 200 pips before it decides to bounce. So it's still very dangerous one to trade. Obviously that 152 was a much more solid hold given the prior action. But these ones, if you tried catching it at 155, you're going to be wearing another 140 pips off of that before it bounces again. So, but you can tell by the price action, as I say, the dips are much more quicker and they're bought quicker than staying low and the sell-off continues. So dip buying is still the way forward for now, but still a dangerous one to play. Kate, let's get it over to you, mate. You're on mute, by the way.
Yeah, sorry, thank you. Yeah, so we have the Bank of Canada today. It's still, I would say, right, in my personal opinion, it's not a 50-50. I'm 60-40 for a rate cut, but that's just sticking my neck out. It's a close call. It's a close call, and markets, of course, talking about either a dovish hold or a hawkish cut. I'm going to say it's going to be a cautious cut, and so I do think that there is a bit of a possibility, just by the fact of cutting, that we see a reaction. Okay. Let's also not forget that we have today we have these ISM services in the US, so there could be a bit of a double whammy coming up for the Canadian dollar here. We are just in the middle of the real action. I think it's really the edges are 135.90, 136 the figure, and there is some here, but those I would still call them fragile trend lines around 137.20, 25. I think the real levels are here around 137.40, 45, where we stopped the last time or the first time back in May, and then a confirmation 137.60. If that would go, then we would trade 138, in my opinion, and have to look at it from a little bit wider stance, because that, I think, if we really start to break here, that will confirm what technicians may call a bullish flag, perhaps, and continue on its way higher. But that would be, in my opinion, only in case of an outright dovish cut. Okay, and the problem is with calling such things is that there is a bit of discord ongoing between Steve McClem and Rogers, between how do you call him, right? Ginger and Rogers,
Stephen Rogers.
Stephen Rogers, yeah. And she's more she's a bit more hawkish and more fighting back against going too early on cuts and being too soft, where I've got the impression that McClem is much more ready to start to err on the dovish side of things. So let's see. They may find a middle way and go for a hawkish cut or a dovish hold in that case. But so there's your edges, and really keeping those ISM in mind in the US. I wouldn't do too much myself. I'm long a call, but I don't have any cash running in the Canadian dollar right now. I do think Canadian dollar may weaken a bit, but we really need to wait for real breaks here, okay, before anything happens. I had a quick look at, as I usually do, on the FX option side, but really the nervosity in the options is really for just the event risk today, a little bit on the combination Bank of Canada and FOMC next week, but really all in all, the FX options market is still relatively relaxed on everything. So that also means, and I've been repeatedly saying that also means that if you see moves outside of those ranges or towards the edges of the ranges, you will likely find option interest to the other side of the range. So if it goes up, they will be sitting on the offer. If it goes down, we'll be sitting on the bid, just because they need to try and get their premium back and trying to trade the range. Okay, it's only if you really break outside that you're going to see bigger moves. All right, so keep that in mind in case we are trading here and you try to go for the break and all of a sudden it turn around. That may just be the reason behind. Okay. So that's the picture. On it may and I think I have more perhaps on the more medium term. If you see here, it has been very undecided in the 147s, okay? But if you see this high 147s, 147, call it 3/4 up to 148, the figure. It's been an area that consistently bounced in the Euro Canada. So take the combination of ECB and the Bank of Canada. So front running a little bit the ECB tomorrow. So you take away the dollar side of things. It's always interesting, and I always like to look at crosses. If ever on the combination of both, we get back into this 147 again, 47.70, 148 zone, pay attention to what's happening there, okay? Because if it holds again, then I would say that this may have the potential to start creeping up higher again. If, of course, and we should get a cut tomorrow from the ECB, of course, they've all virtually announced it. If they wouldn't do it, they can all just resign, in my opinion. But they, it may.
We pray for that moment.
Yeah, yeah, you're absolutely right. We'd pray for a good few of them at least. But yeah, I mean they virtually announced it, right? But it doesn't mean that the euro, as we can see, it's actually euro is holding up relatively okay. So it doesn't mean that the currency has to fall out of bed when the central bank cuts. But if we see a bit of the combination of let's say Bank of Canada holds and they are relatively neutral, and then the Bank of ECB cuts tomorrow, and we get back into this zone just because the algos look at a hold versus a cut on the one side and the other, and we get back in here and it holds, then I'd say pay attention, okay? Pay attention. Of course, if we get a dovish Bank of Canada, we may never get, well, never say never, but we may not even get there, and we just continue to push higher. So that's the other one that I'm going to keep a very close eye on over the Bank of Canada. And then we need to talk just quickly about the Swiss franc, okay? Look at this zone in the Euro Swiss. On the way up, on the way back up, this is your the whole of 2023 move, okay? It's been trading, 96.70, 96.75, okay? We had this scare through there the other day, but take that away. It's always traded there, stopped there, and then flew through. Stop there, stop there, stop there, started to bounce again, okay? Yesterday, bang to the level, 96.70 again. All right, that's your Euro Swiss support, all right? And I think now waiting for what the ECB will do, unless we get a very negative risk headline or news out over the coming 24 hours, I'd say this is really the level that you need to pay attention to. I would say we are perhaps going to bounce around and just trade 96.70, 97.70 for now. All right, this is my what I think is going on right now. Of course, you cannot, like Ryan was mentioning as well on the euro sterling, you cannot completely rule out this algo blip. When they cut, you go below, and then but then we will have to see whether they really stay below or not. But this is now, I think, fairly nice that again for us, if you look at just the pictures and trade it technically, this is a very good hold. And what happened on the dollar Swiss? Exactly the same. And just going to. And exactly the same happened. This 88.80, 88.90. Okay, I said about the 200-day moving average, 88.90. Low 88.84. Overnight 88.90 or so. This is your level on the dollar Swiss, 88.80. Okay, if it goes through 88.80, bad news, but it's holding for now. All right. So this is another one which is relatively simple to watch for. The downside, that is correct, Dimitri. But don't forget that the bounce that we are seeing now comes on, or the hold as well that we are seeing comes on the back of warning shot from SMB Jordan, expectations for an ECB cut, a big washout of carry trades that we had, yet the level showed up again. Okay, that's what I mean. The level showed up again. Whether it's going to break or not, that we will see in the future. But in the meantime, that level it has been traded again from by the markets. Okay, that is what I mean. And the same thing happening on dollar Swiss. The issue with dollar Swiss is that we are below the daily cloud, and that since we reversed earlier this year, it never traded. It traded once inside, but then we have this big washout. So there are going to be hurdles. Where are the hurdles? Well, it's relatively simple: 89.80, 89.90 prior low, already 980, and then here. Now I'm taking the cloud off again. This one for me is now the top side, 90.10. 90 and a quarter. You can see those 90 the figure, 90.10, 90 and a quarter, trading so many times in this dollar Swiss. Okay, so if that starts to go back, then I think this has just been one big scare, and we are going to move back up. Now, to be decided, because we have a big dollar week this week as well. This afternoon, I think ADP. Yeah, ADP this afternoon. Then we've got the ISM. Then we got perhaps something else in between. And then on Friday, well, the claims tomorrow. And then on Friday we'll have the jobs report. So I am personally not going to touch it right now. I do think that there is a possibility that we come closer to this level again, because we saw the bounce. And as I said, I think the bulk of the scare on the carry unwind is maybe done just for now, so that we may see a little bit of a natural bounce just because there are less sellers around. That is the affair. And then you watch those two levels for when we go into the US data. All right. If ever this starts to break here, then we may have a visit back down in the 87s, you know. But first things first. All right. And I'm looking at the clock, and I think this is good enough for today. Ryan, back over to you.
Thank you very much, mate. Yeah, I agree with you on dollar CAD. I'm just going to flick it up just quickly. For me, it's in the. Let me get the screen up. I was wondering where this was going to be coming into the BSE, and for me, it's really in the optimum place. You know, give or take 17 pips or whatever. We're bang in the middle of 136, 138, and that is going to be good enough for me to try and either edge of the range if we get a move, because I think 100, 110 pips or whatever is going to be a good stretch point. If we just get a cut or no cut, and it doesn't come with any sort of huge news, like they're never going to cut again, or they're going to hike next meeting, or whatever crap they might come out with. So if it's part of the course, if it's a cautious cut, then we could get a confirmation move up towards that 138 or high 137s, and I'll be looking to play the edges of that range for that one. So yeah, but as Kay says, and we're often fond of saying, if you want to take the dollar out of the equation, because 15 minutes after we'll have the ISM, then look at the crosses, look at Euro CAD, Aussie CAD, or some of the others, just to get away from that dollar exposure. You might get a cleaner trade. Right, that's it from us lot for today. Join us on Face later, of course. Don't forget the sale, last knock-ins for that as well. Other than that, thank you for coming to the Flow Show. Thank you, K-Man, for all your insight. And have a great day, everybody. Stay safe over the Stiff and Rogers show. And we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.